Hello friends, DK this side. In this video, we will learn all about fundamental analysis in the stock. If you are a beginner in the stock market, this learning session is for you. Any stock market participant ultimately wishes to find a suitable business in the stock market, to invest in the stock of that particular business, to participate in the stock market with the sole aim of getting a higher and sound returns on his or her investments. Am I right in saying so, friends? If this is our aim, to invest in fundamentally sound business, then probably fundamental analysis plays a very, very significant role to find a suitable stock in the stock market. Ultimately, we invest in the business. We buy the part shares of that company which is looking good to invest in. And stocks are the means to achieve that end objective of higher return in the stock market. So this video will tell you as to how the step-by-step process can be adopted. So this is nothing but the step-by-step guide towards fundamental analysis in the stock market. Friends, do not forget to like this video, subscribe the channel, hit the notification bell for updates. Let's begin. If you ask me to define fundamental analysis in the stock market, I would like to define in a very, very simple fashion. Fundamental analysis is to find out the intrinsic value or the fair value price of that particular stock that belongs to fundamentally sound business, fundamentally healthy business. And in order to find out the suitable stock from the stock market, where thousands and thousands of stocks are listed or being traded, we need to follow certain well-defined steps. I would like to make it very, very simple for you. There could be several other financial parameters which are being looked by the experienced fundamental analysts. But even if you look, these parameters which I am going to share with you will be enough to take an informed decision in the stock market. So what are those fundamental parameters that we should look into to find a suitable stock for long-term investing? First is the valuation of that stock at the current market price. Second comes the possibility of that company growing in future. That is future growth possibilities based on the estimate or based on the forecasts. Then the past performance of the company, how the company has performed or the business has performed in the past years. Financial health of the company. Then comes the whether the company pays the dividend, because dividend is nothing but icing on cake. If you invest in a stock and get some dividend, nothing like it. Then we look into the management team, because ultimately they are the drivers of the business in which we wish to invest. Now let us look at the individual fundamental parameters one by one. First is valuation, where we check how the stock is looking in terms of valuation at the current market price. So we do the peer group analysis, because there will be several companies and businesses which are operating in the same sector of economy. So we compare other stocks and then we decide whether this stock is looking suitable in terms of valuation or not. Then we compare it with the industry also, sector itself also, so that we find whether this stock is undervalued with respect to the sector or not. Or if it's not undervalued, at least it should be fairly valued. If it is expensive stock, then probably our investment in that stock may not yield the return that we wish to. And in order to do this valuation analysis of a stock, we use various financial ratios like P ratio, price to book ratio, price to sales ratio, PEG ratio, which indicates the price to earning to growth ratio. And then we check the fair value price or intrinsic value of the stock and compare it with the current market price to find out whether this stock is suitable in terms of valuation or not. In order to arrive at the valuation matrix of this stock in terms of fair value or intrinsic value of the stock, we check the future cash flows, estimated future cash flows, and discounted cash flow model is adopted. Nothing to worry that you need to calculate the intrinsic value or fair value price. There are n number of portals available, n number of websites are available, provide you the data so that you can only look at the data to finally assess whether the stock which you have selected is good enough to invest for long term or not. Now we look at the future growth of the company in terms of earnings, in terms of revenues, and in terms of what is the estimated future ROE, return on equity. Because future growth is significantly important if our stock price has to go up. Ultimately, valuation plays a very significant role to decide whether we are buying the stock at the current market price, which is looking good, undervalued, or fairly valued. But the future growth will decide how much stock is likely to grow in the future. These comparative analysis is done for future growth with respect to earnings, revenues, future return on equity, and compare it with the industry where the company or business is operating in. The next step in the fundamental analysis of the stock is to check the past performance of the company's business. Past performance indicates the efficiency of the company to utilize its resources. So in past performance, we do the earning growth analysis, we check the return on equity, we check the return on assets, we check the return on capital employed. I always consider selection of the stocks to be part of our portfolio in the stock market. It is just like selection of a right cricket team for any country. The country selects the top 11 players to be part of the team in the cricket, or for that matter in football matches, for that matter any sports. So the past performance is given a due consideration and fitness of the player is given a due consideration, give them the place in the team. Past performance indicates that they might perform in future. They may not perform, but there has to be a set criteria to select players for the team. So in the stock portfolio, we select the 10, 12 good stocks from different sectors of economy based on the past performance, valuation, future growth estimates, so that our portfolio performs well and outperforms the broader stock market, giving us the good alpha. What is the next step? Like in any cricket team or any sports team, what we do, we check the past performance of the player and then check the fitness of the player. Even if the past performance is good, but the fitness of the player is not good, the player doesn't find place in the team. Similarly, in the stock market, we check the financial health of the company. How we check the financial health of the company? We check the assets versus liability. The short-term asset should exceed the short-term liability and long-term liability. So that indicates the financial health of the company is good. Then we do the debt-equity ratio analysis. We check the historical debt-equity ratio, check the trend of the debts, and then check the debt coverage ratio. Whether the debt is properly covered with the operating cash flow, the interest obligation on the debt needs to be properly covered with the earnings of the company. The next step in the fundamental analysis of a stock is to check the current dividend yield. Check the history of the dividends paying ability of the company. What is the history says about the company paying the dividends to the shareholders? Because it is just like icing on a cake. when you invest in a stock and you get the dividend, it's an additional advantage. So we check the current dividend yield, we check the dividend history, we compare it with the industry and the broader stock market, whether the company is paying the good amount of dividend or not, in comparison to that of the top dividend paying companies, or at least the average dividends paying companies in the stock market. Then we check the dividend payout coverage ratio against the earnings, against the cash flow. Now, in the process of fundamental analysis of a stock, it is very, very important to check the management team of the company. Ultimately, management team of the company are the drivers of the business or the pilot of the business, because as a shareholder, we are not much control on the company's management to drive the business. So the company's management team is equally important to drive the business in future. So broadly, we look into the management team, their experience, the quality of the management team with regard to the experience they hold in the business. Because quality of the management and experience of the management is extremely important to remain ahead of the curve in the competitive stage of the market, where similar kind of businesses are performing in the overall sector of the business from where we are selecting the stock. I would like to emphasize very important thing. The stock market is just like an ocean where we are searching a fundamentally sound business, searching a pearl from the ocean. So always ask yourself whether there is some better alternate available in the stock market. Nobody is forcing us to buy a particular stock. It is us to choose the right stock which has a potential to perform in the future. Friends, this is a small tutorial on fundamental analysis of the stock market. In fact, I would say the process of the fundamental analysis might help you to understand the basics of the fundamental analysis in the stock market, especially if you are a beginner in the stock market. Give a lot of thumbs up to this video, share this video, subscribe the channel, hit the notification bell for updates. Looking forward to meet you very, very soon.